A terrible day in the markets. Um, when the inflation number printed, or actually after probably, the S&P is down for the day 177 points, or 4%, 4.33%. The Dow is down 3.9%, about 1,200 points, 1276. The Nasdaq was down over 5%, 632 points. The Russell wasn't hit too bad, down 3.9%. Anyways, I'm surprised crude oil was up a third of a percent, but it was. Gold was down. Gold was down a lot more today than where it closed at. So we closed it, I guess, 1712. I'm not sure if that's after hours trading or not. But anyways, silver too was down quite a bit more. Closed down about 1%. The euro took a hit, down 1.5%. Here's where it got really ugly. The 10-year bond is now yielding 3.4%. I'm guessing we're going to see it go up to 3.5%. TLT actually was up, I think, 23 cents for the day. That's kind of a shocker. It kind of surprised me. The pound was back down to 114. Got up to 116 the last couple of days. The yen is at 144.8. Look, it's down over almost 1.5%. I just can't believe. I think the yen has fell 30 or 40% in the last 18 months. I want to say 18 months, but I could be wrong. But it's just down a lot, 40%, I think, for like a little over a year. Then we got BTC. Bitcoin was down 10%, looks like. So I was actually shorting Bitcoin today, so I had a really nice profit. I got really lucky. Anyways, I just got lucky on that. I wasn't able to get an order in yesterday on the Qs. I was going to short the Qs. I would have been up way more than 10%, I think. Well, quite a bit more. I would have used leverage. Anyways, as we can see, Alibaba was down 5%. Oxy, that's the Warren Buffett's oil company's been buying, down 2%. Intel got hit for 7%. You can just see Petrobras is down 4.75%. Ballet's down almost 5%. Anyways, it's just a really bad day in the markets today. Not much to see here, but ugliness. Even the utilities are down over 2.5%. Pan American Silver down 4.33%. Anyhow, the market has been rallying for the last several months. It looks like to me this is the end of the bear market rally. It appears to me we're going back down to the old lows, which I'm not sure where they were, but it seems to me we're going down. I personally think we're going down another 20%. What's interesting about today is gold held up really, really well. And TLT, the long bond, I'll put it up here. Actually, it's been going up. It's been going down, and it's normally you expect it to rally during these down days, and it hasn't. Today is one of the first days it's actually rallied. So we're up at almost 0.25%, 25 cents, and then after hours trading it was up 33 cents. Wow, I didn't realize that. So yeah, it's been a concern for most of this year the way the 20-year Treasury bond or this ETF has just really been lost about, I think, 26%. We can see the year to date is 25.9%. So this could be the beginning of a big rally in TLT. I don't know. I've been getting crushed, and I think I lost about 10%. I'm down 10% in this, and about 10% in the 10-year bond, which is IEF. It's another ETF. Anyways, the takeaway for me is it looks like gold wasn't down that it was down initially, but then it came back up. So it looks like Treasury securities and gold's held up pretty well. So that's telling me the bear market is going to be on in earnest. We're going to have another 20% down probably, and it's going to get ugly. And save that. Anyhow, it looks like it's just going to get ugly for the rest of the year. Not sure what all this means, but with the inflation at over 8%, I don't think the Fed's going to stop raising rates. Rates are going to keep going up. And we could have a real big problem in the United States and in Europe, especially in Europe. I don't think the energy problem's been solved. I don't think the problem of I think higher interest rates aren't really going to help the United States or Europe. I think this is going to end in a really big disaster. I'm not sure what that means. Most people assume the Fed's going to pivot and then they're going to start inflating the money supply again. If they don't do that right away, it's going to get really ugly. If it gets really ugly and then they inflate, it's just going to make it worse. I don't know what their solution really is, except for to take some of your capital and hide out in long-term government bonds and gold and some gold securities, maybe some platinum securities and some oil securities, and maybe some utilities and consumer type shares and stuff like that. And then keep at least half your money in cash, because this is not going to turn out too well. And I think today is the start of kind of another rollover in the stock market. Anyways, that's just a few comments on what happened in the markets today. Not much else to say. Like, share, subscribe, and leave a comment. Thanks.